Well, hello, traders and investors. Today is June 29th. It's a Monday. It's the last week of June. And as I always say, let's get into it right now. I'm going to start off. Today's Monday, so I want to start out with the global outlook, show you what you guys can expect for the week ahead, show you where the pitfalls are, show you what you can watch out for, and give you a good outlook. Now, because it's a shorter week, typically volume is muted. Anytime you have a holiday, especially a big holiday like 4th of July or Christmas, usually you see traders taking the week off a little bit earlier. So expect subdued volume till next week. That's very, very normal. Also, looking at the news this week, it's not the same thing as last week. Plus, we have FOMC. FOMC is going to be on Wednesday at 2 p.m. Usually, volume and volatility doesn't rise till afterwards. And then Thursday, we have employment data and jobless claims. So the big days of the week, don't expect a lot of volume today or Tuesday. You do have consumer confidence, but the big reports are going to be afternoon Wednesday and Thursday. You got jobless claims and employment data on the same numbers, and you got FOMC. I'm not expecting a lot from the FOMC. I don't think the Fed is going to make much of a change, but I'm going to be interested in hearing what they have to say going forward. In terms of jobless claims, the numbers, I don't know why we got here. Let's take a look and see if we can get the consensus here. I guess not. I guess I'm not logged in. I'll log in and make sure, and I'll show you as the numbers progress forward towards the second half of the week. I guess I have to log in today or something. Usually it just takes me right to the estimates. But the bottom line is, usually when you have a major report like the GDP like we had last week or FOMC, you don't see volume coming in before the report because pro traders or hedge fund guys don't want to be caught on the opposite side of the market. So usually they'll make a move as the report, as we get a projection or the next day. So look for volatility and volume to increase Thursday and Wednesday. And keep in mind that because it's a holiday, expect everything to be slightly muted. Moreover, the world is being driven by COVID-19 once again. It stopped for a while, but it looks like we're having another case or another chapter, especially in the three biggest states in the country. And that's not looking good. Let's talk about that right now. So world stock market was subdued on Monday as rising virus cases caused some governments to backtrack on pandemic reopenings or to warn that they might have to. And remember, the markets are always looking ahead at everything. So this is not uncommon. And I anticipated this, and I told you almost every day that this was going to happen. Investors have been banking on businesses continuing to reopen, helping to drive a recovery from the worst global downturn since the 30s. Progress has been halted. Wall Street says a sell-off Friday after Texas and Florida, and California too, by the way, reverse course and clamp down on bars again in the nation's biggest retreat yet. The new COVID-19 has surged back in many places, especially America's South and West. COVID-19 has deepened as the numbers of confirmed cases top 10 million. Wow. With more than 500,000 reported dead from COVID-19, according to a tally by Johns Hopkins University. Terrible. China reported that profits of major industrial companies rose 6% in May from a year earlier. That's actually really promising as demand recovered and costs remained relatively low. I'd like to see that in this country, assuming they're telling us the truth. That was up from 4.3% drop in April. So 6% rise in May from a 4.3% drop in April. I'll take that. Chinese oil refineries and other heavy industries have profited from falling prices from crude and other commodities as global demand has waned amid the pandemic. But profits fell more than 19% in January and May. That's not good. And the numbers of confirmed new COVID cases per day in the U.S. has surpassed 40,000 for 3 straight days. That's very, very bad. Lastly, crude oil price is still below $40. It's the $36.68 till we get it above $40. U.S. manufacturers, producers, and resellers, frackers, we're going to be suffering because our cost is $40, $41 around that level. And it looks like we have a long-term ascending triangle. Let me actually take a look at oil to kind of show you what I'm looking at here. Look at this. Nothing is working out. The typing isn't working. Let me show you this. We were actually talking about this on Friday, but you see here we bounced out. Let me just do this here on a 9-month basis. so you could see what I'm talking about. That's an ascending triangle right there. And it looks like it's going to break higher. And if it does, it's going to clip the 200-day moving average. If that happens, that's going to be very, very positive. You could see it here on a weekly chart. It's a little steeper, but it's the same thing. This is a very positive pattern. And it's actually the opposite of what we're seeing on the S&P 500. Now, I drew this triangle about a week ago, maybe a week and a half ago. And it's been doing exactly that. And it looks like it's a descending triangle. It's a congestion pattern with a bias to the downside. And when you look at these momentum levels, which this shouldn't be a surprise, I've been showing you this for a long time. Let me show you again. Let's go to the S&P indices. When you look at the number of stocks, look at this. This is the 200-day moving average. Only 32% of stocks. You see that? Boom. See, that's a bounce from what happened back in February. We went higher, but we only went up to about the 42nd percentile on the monthly basis, and then we started dropping again. And if you look at the 50-day line, I told you this was going to happen. We went all the way to 90th. Look at that. I drew that here a few weeks ago. We went all the way down. But the problem is usually when we go to these levels, we don't stop right here. We stop down here. Look, from here to here, from here to here, from here to here. You see what I'm saying? We end up coming down. And especially when we go higher up, it stretches out the band. So when we were here, all the way up here, I noticed that the percentage of stocks trading below the 200-day, this is the 50-day, the 200-day line was moving down, and we were overbought, stretched out on the 50-day line, and I said, this is not good. So I'm not going to be warm and fuzzy till this number here, it's at 47 now, gets all the way till about 30th or 20th percentile, and that should move price action below the 200-day moving average. Also, if you look at the NASDAQ 100, let me show you that. It's been really, really bullish, but it's been cooling off lately, all right? And we are seeing a divergence. I want to show you this. You see the RSI oscillator and price levels? You see that? Moving lower, right? You see this? Price action, it's moving higher. It's exactly the opposite of what we saw here. It's exactly the same thing, not opposite. Let me show you this. Price moving higher. Oops. Man, I just can't get it right. I just can't catch a break today. Let me do this here. Price action moving higher. Momentum levels moving lower. And look at what happens. Boom. Price moving higher, momentum looking lower, and boom. Now, I can't guarantee that's going to happen, but do you notice the similarity between these two charts? Price moving higher, momentum levels moving lower. Price moving higher, momentum levels moving lower. It's not a coincidence. I'm actually going to take a little picture of this so I could save it here. I want you guys to see this because I want to show this to my guys. Look at this. Higher, lower, breaks down, right? Now, let's look at momentum levels on the NASDAQ 100. NASDAQ 100. Whoops. Let's take a look here. And if you look at this, you're going to see a line chart. And again, stretched out, coming down right now. So even though the NASDAQ 100 has been leading, you all saw the same thing that I just did right now, right? We all were looking at the same thing. Momentum levels are coming down. The long-term momentum levels are already lower. And the chart patterns look remarkably similar to how we looked in February. That's not a positive sign, folks. I mean, I'm just showing you. It happened in February, and it's happening again right now. The same thing. Divergence analysis is very accurate. So again, we've got big news this week on Wednesday and Thursday. It's going to be a muted week. and we've got momentum levels on the NASDAQ diverging from the RSI levels. The percentage of stocks in the S&P needs to cool off, and the percentage of stocks in the NASDAQ also needs to cool off. That's right here. Again, I want you guys to see the market from the same perspective that I'm seeing right now. We went all the way to the 99th percentile in the NASDAQ 100, and now we're cooling off. Folks, the market is overdue for a slight cool-off period. Just like we saw in February, I'm seeing something very similar now. Now, it may not be to the same degree. Don't expect like the biggest crash in the world, but a cool-off because of all this COVID is very, very likely. Now, folks, get this. I've just caught wind of something incredible. There's a brand new way, yes, a brand new way to make money in the markets with technology that predicts the exact price a stock will move to. Imagine you enter a stock and you predict ahead of time the price level it's going to give you down to the accuracy level is stunning, all right? Can you even begin to imagine what this could do for you in your portfolio? Folks, I'm talking about 90% accuracy in some cases. Yes, 9 out of 10 accuracy. And I have all the answers. Click the link below to discover the strategy for yourself. Do it now. Don't delay. Take advantage of this opportunity. I'm serious. Imagine. Brand new way to make money. Predicts the exact price the stock is going to move to. 90% accuracy. How can you afford to miss that, right? Don't. Follow the link below. Do it now. Don't delay. I'll talk to you soon, and have a great day, and have a great holiday week ahead. Bye, guys. Talk soon.